What the heck is happening in the Seattle real estate market right now? And it's a question that I'm getting asked by a lot of people here lately. And what I want to do in this video is talk a little bit about the good and also the bad of what we're seeing right now in the housing market. What's up, everybody? Zach McDonald, your real estate agent with Real Property Associates. And we're going to start out with the good. And I guess this is good if you're a homeowner, maybe not as good if you're a buyer. But for homeowners right now, people are excited because their house is worth more than it's ever been worth. And if we're looking back at March's data, so make sure you are paying attention to the monthly market updates on this channel. If you haven't subscribed yet to the channel, please do so right now. Take a minute and just go ahead and hit that subscribe button so that you can see these market updates on a regular basis. Now, I wanted to throw in an extra one here because people are asking all these questions about the market and what's going on, and I think it's fitting to add in a little bonus commentary during the middle of the month right now because I think people are a little bit more curious now than ever. And if we're looking at the most recent data here, I mentioned that earlier, Seattle's got a new median sales price record, up 17% year over year. Bellevue also set a new record, $2.25 million median sales price record, 47.1% up year over year. Crazy. King County, $935,000 median sales price, up 13.5%. Snohomish County, $800,000 median sales price, up 25.7% year over year. That's pretty sweet if you're a homeowner. But I think the tough side is being a buyer. You've got prices at the highest point. You're trying to figure out, like, what do I pay for a house? How do I buy a house? Because it's really, really competitive. And if we look at the competition, we're seeing the competition is continuing to drive the prices up. 11.9% over asking price in Seattle last month, 17.5% over asking price in Bellevue last month, 13.4% over asking price in King County last month, and 12.4% over asking price in Snohomish County last month. This is like county-wide, huge prices. There are places in King County where houses are selling a little bit more even than they were in Bellevue last month, which is crazy. But is this going to continue, right? That's the question. Is this something that we're going to continue to see? Is it even possible for homes to continue to go up at this type of a rate? And the answer is, I don't think so. I don't think so. Now, does that mean home prices are going to crash? I don't think so. I think that's the concern that people have right now is, well, if I buy right now, is this house going to be worth half of what it's worth now in 6 months, a year, 2 years? Now, when you're buying real estate, I don't think it's a great idea to speculate. Okay, so that means you're not trying to make a quick buck in real estate. Now, over the last couple years, wow, how many bucks have people made in real estate, right? Especially if they bought and sold. Maybe a couple years ago they bought and then they've sold more recently. But historically, real estate has its ups and downs. And that's what you're going to see in any type of investment. So I would say that you're going to experience that whether you buy a house now or if you bought a house a few years ago. You're going to see the ups and downs, okay? But right now, we're trying to figure out where are we at, where are we headed? And if we're really honest with ourselves, nobody has a crystal ball. I do not have a crystal ball. I could say one thing and next week it might be the complete opposite. And sometimes it's completely outside of our control, right? Who expected COVID, right? The stock market did not expect COVID. Neither did the housing market. And it had a completely different effect on both. But if we're looking at interest rates, right, because in real estate, there's a few things that we can kind of look at. We can look at supply and demand, right? That's a big driver for the local markets. How many houses are available and how many buyers are there trying to buy the houses? Kind of simplistic, but it works really well when you're looking at a local market. Well, as of late, there haven't been enough houses for all the buyers. We've had really, really low supply numbers, inventory levels. And you would think as interest rates have been rising, and now, get this, interest rates have now, as of last week, 414 is the most recent Freddie Mac survey. They do a weekly survey on mortgage rates, and their average locked rate last week was 5%. 5%. 5% was the highest rate that we've seen in quite a while on their survey, and it's up 1.96% year over year. That's a lot of extra dough that people are forking out on a monthly basis and over the life of their loan to purchase a house. Okay, so you've got houses at what we've just talked about, all-time highs. So affordability is already tough for many, but you're still seeing lots and lots of offers. You see mortgage rates starting to climb, and bank rates data is accurate as of 4/19 today as I'm recording this video. 5.27% is their average surveyed lock for the day. Okay, so we've got really high rates, at least for what we've been used to, still historically normal rates, right in the normal range, but higher than what we've seen over the last few years. And we've got record high prices. So what is going to happen? And I think the first thing we're going to see is that some people just can't afford to buy what they would have liked to buy and where they wanted to buy. So some people are going to be shifting what they wanted to buy and buying something different. Some people are going to be sitting on the sidelines, unfortunately, not able to purchase because what they would like to buy is not within reach anymore. And rates may continue to go up a little bit. That's not out of the question. At the beginning of the year, I was thinking they wouldn't get over 5, but here we are. Here we are. And as we're thinking about affordability, if fewer people can afford to buy a house, you'd think that would impact demand, right? So maybe we're still seeing the same amount of houses. I don't see like a ton of houses coming on the market, although I do have quite a few listings that are going to be coming on here in the next month or two. So please, 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 market, keep holding out. I'm just being silly. I think it's going to be fine. I think what we're going to see, though, is a little less of that competition. I don't think we're going to see 20% over asking price for every house if rates continue to climb. But even this week, I'm seeing that. Like I had clients make an offer on a house. There were 14 offers. And the house sold like 30+% over asking price. It's not going to close for a few weeks, but this is like happening right now with rates at 5+%. So there's still a lot of demand in the market, and it does impact and affect a lot of people having higher rates. But there are a lot of people with money in the market right now trying to buy a house, and there aren't enough houses. So although it does affect some people, there are still a lot of people, especially in the higher price markets and in places where the demand is a lot higher, like Seattle, like Bellevue, and the surrounding areas, King County, Snohomish County, where people can still afford to pay the prices, even with higher interest rates. So I think that's something to consider. There's got to be some kind of a tipping point here that we haven't hit yet, obviously, but we may see that in the coming months. And I think what we will see when that happens, if that happens, is a little bit more of a flattening or a slowing down of the market, more of like what we would see maybe in a traditional summer market where it gets a little bit slower. We saw it even last year in the summertime. There's always kind of a seasonal correction, seasonal slowdown in the housing market in Seattle area. Maybe it's a little different in other markets, but we typically see that here in the summer times and into the fall and winter months, and then it picks back up and then it slows down a little bit, levels out. So I would expect to see that this year, just like we always do, but maybe it's a little bit more pronounced as we head towards the end of the summer and into the fall. But again, these are just thoughts here as we're talking. But as clients are asking these questions and having these concerns, I think the biggest thing to have in mind is you got to have a little bit longer of a game plan. Investing is not something that you do, at least in my opinion, for the quick hit, the quick turnaround. Investing is something you do for the long haul. And we think about and we can really, really focus on right now, but in the long run, what's it going to look like? So for me, when I invest in the stock market, I'm not buying stocks to sell them tomorrow. Maybe it's up a couple percent, maybe it's down a couple percent, maybe it's up 10%, depending on what kind of stock I'm buying, but I'm buying it and I'm holding it. Same thing with real estate, I'm buying it and I'm holding it. So today's price matters, definitely, and you want to buy at a good point, but buying and getting started is the first step to seeing the growth in the long term. So have a longer plan. If you're thinking that you're going to buy something and sell it in a year or two, you're buying at the peak of the market, rates are going up, you might see the market flatten out a little bit. This might not be the time for you to buy. It might not be the time for you to buy. So this is just me being honest with you. If you're thinking, yeah, I'm going to buy a house for a year or two and then I'm just going to sell it and I'm going to make some money and get out of here, you might lose some money. It's expensive to buy and sell real estate. So if you're thinking about doing that, maybe you hold off. But if you're somebody that's saying, yeah, I want to buy a house, I'm going to live in this for the next 5 to 10 years, you're going to be fine. 2008 to 12, 13 was a 5-year period, and that's like the worst housing market recession we can think of off the top of our memory. And it was terrible. But you know what? By 2015, and at least in Seattle, right, some of the higher price markets, the houses were selling for more. So longer game plan. That's my thoughts for you here today. So Where are we headed? I don't know 100%, right? Nobody does. But I think we're going to continue to see a strong spring market here. I think housing prices are going to continue to go up, but I do think we're going to start to see things mellow out a little bit if interest rates keep going up. So if you're a buyer, we already talked about this, right? You're going to have a little bit longer of a game plan. You got to have a plan. Where do you want to be? Where do you see yourself in 5 years? Where do you see yourself in 10 years? And you got to build a plan around that, right? You're going to have to rent anyway somewhere else. So you got to think through all these things. What's it going to cost? What's that investment going to look like? What's my plan, right? For a seller, it literally is an amazing time to sell your house. So if you're thinking about selling, this is going to be the time to jump in and capitalize on that before things shift. Is the market softening? I'm not really experiencing that yet, but could that happen here in the near future? It could. So if I was thinking about selling my house, I might think about doing that here sooner rather than later. Thanks so much for watching this video as we talk about the market and where the heck we're headed. If you want to continue to follow along and hear about the market on a monthly basis, I have this YouTube channel for that very purpose, to help keep buyers and sellers and future buyers and sellers informed about the market. So please consider subscribing, and if you know somebody who could benefit from this video, please consider sharing it with them.